morning, everyone, and welcome to the Morning Edge webinar. I am using the new mic setup, so it's just taking a couple minutes to set those settings up. Let me just move this out of the way. And hopefully the audio sounds a lot better. I'm using the Yeti mic. Okay, let's. The big mover obviously was on the, well, we did get the big move out of the euro. We got the big move out of the cable. Certainly have seen the Aussie going and respond in kind. The dollar index did make it down to our bias chart support. I thought they were going to make that during the U.S. session, but they did go in and make it down there. Pull this over here. Yeah, 94.36 was our bias chart support here on the cash dollar index, and that's exactly where it went to the tick. Right there, to the tick. Although I thought it was going to make it in the U.S. session yesterday, the euro made it right to our 16.98 that we had, and I think we just ticked 17 and pulled back, but we have made it up here, buried up a little bit here in the euro, but certainly we got a favorable response. I was talking with Blake yesterday, and I mentioned to y'all too, I don't care what the year could be in the worst downturn cycle, and the news can be as bearish, and I tell you what, it always rallies after the ECB, always. I mean, let's say at least 9 times out of 10, and then sure enough, that's exactly what happened. No matter what Draghi says, and Draghi does try and talk down the euro, it always comes up. It's like Blake used to say, it's like that beach ball in the water. You just can't hold it down. Every ECB meeting, it always rallies. It's just the way it is. And so they're playing the percentages. I was hoping for a little bit lower dip in here. We didn't. We just barely pulled back. And once again, obviously, it did go in and pop back up. Ran out of gas right in the area that we were looking at, which was the 16.98, but didn't run out of gas very much. But I was looking for the dollar index to get to 36, which it did in the European session this morning, but I thought it would get to 94.36 in the U.S. session. I think the low was 94.42 at the time. One big mover was obviously the gold market too. That took off. But I tell you what, that's another thing here is on the gold market, we're looking for a bigger move overall. But you can see here where the gold ran out of gas. 12.19 was our bias chart resistance, okay? And the high on gold was 12.18 and change. Well, yeah, 12.18. So we're up by $1 on our bias chart resistance, which was on gold, which is 12.19. We are still overall looking for a bigger move in the gold market, but yeah, that was our bias chart resistance at 12.19. Where gold, gold struggled at that same 12.19 area before. If you've been following the analysis, this is some time ago, but it's about a month ago or whatever. Maybe I don't know exactly what. There was our level. Remember the 12.19? Remember that was our bias chart resistance back then on August the 12th. Well, this is when it hit August 12th, but it was right here on August 26th. And sure enough, that's exactly what ran out of gas. It actually, I think it ticked up as high as what, 12.20, and then we're looking for a rotation down to 12.08. I thought it would take about a couple of days, maybe 2.5 days. Well, once it hit that 12.19, it rotated down to 12.08, all within the same session. Then it actually held up pretty well. I thought it was going to drop further. But like I said, we popped back up. But yeah, look on the profile chart. You can see the point of control here and volume point of control. And that's why I thought that 12.19 was going to be a big area, was going to be a very good area, which was what, about 2 weeks ago. And it provided, ended up being quite formidable yesterday too, although the high was 12.18. That'd be just a sec. So we'll go and take a quick look at the news, and then we'll jump into the analysis. Everything's trading fairly quiet, although up at these upper ranges for the euro. We did talk about the cash dollar index, the analysis we were looking at yesterday. I was talking about this being broken down, and we're looking overall. We'll see what happens, but I'm looking for a move down to 92.80. I think it was, yeah, 92.80 with a pause at 93.72. But you can see how we've broken out of this trend line here. And we gave the, I don't know if we call it the, not fundamentals, but the tone or whatever, is that, the administration reaching out to China, now they're denying it, but it's a perceived sign of weakness. And that's how the market's going to go and view it. That's, that has been the oxygen for the dollar index to try and keep holding at these highs. Now with the U.S., all this tough talk, and then all of a sudden they say, we're going to reach out to China and try and, initiate some talks again. Perceived sign of weakness. Whether you agree or not, that's just how the market's going to read it. And we've turned around and rolled over here. Not a whole lot, but once again, we can start to garner some momentum and move lower here. Dollar's still in good shape from an overall perspective. Look at that. But correction, yeah, sure, certainly warranted. I just don't see what kind of headline they'd be able to come up with now that could push the dollar index back up. So obviously that allowed for the euro to move higher, allowed for gold, although gold quickly gave up those gains, and it ended up holding here at this. Remember, that was our key area from before, the 1207 being a daily breakout area, and that's actually where it held down there, and then popped up, and then kind of came down here and tested a little bit lower before moving back up a bit. But I think right now, yesterday's price action was really disappointing for bulls. So be quite interesting the way gold's going to try and play itself out. Anyway, let's go on and move in and just do a quick overview with the news. Canadian dollar strengthens on the NAFTA trade deal optimism. Boy, this dollar CAD has done nothing but gone south of the border big time. Nary even a bounce. But states here the Canadian dollar edged higher against its U.S. counterparts on Tuesday. Well, this is actually saying, so this was a little bit older here. Not sure what happened with that headline. So it's continued to stay stronger. So we'll just move on to the Aussie dollar. The Australian dollar nears its best week in 5 months as bears retreat. The Aussie dollar was heading for its best week in 5 months on Friday as safe haven flight from emerging markets calmed a little, and a run of solid domestic data caught bears in a short squeeze. The move, it got a lift overnight when Turkey's central bank hiked rates by a surprisingly aggressive 625 basis points to 24%, boosting the badly beaten lira. The move eased concerns about emerging markets and prompted some short covering in the Aussie, which had been sold as a hedge against such risk. The reversal was the sharpest against the safe haven yen, with the Aussie currently up 2% for the week at 80.52. Also helped was Thursday's strong August jobs data report, which was underlying the resilience of the Australian economy and nudged bond yields higher. We talked yesterday about how there's been this rotation into Aussie assets because it's gotten the stuffing knocked out of it, and we've got the RBA. I mean, the idea that one thing about the Australian economy, not only is it resilient, but also good fiscal restraint. Let me put it to you that way. Sean Callow, a senior currency analyst at Westpac, noted some of Australia's major commodity exports had been faring well, even in the face of the Sino-U.S. trade dispute. We talked about how mining stocks are at near record levels. Australia's commodity prices have been trending higher, even as the Aussie has been falling. There's a scope for a push to 72.50, 73 over the next week if risk appetite holds up. That may be the case because, like I said, now we're seeing the U.S. administration cave in a bit. Now they're the ones reaching out to China after a lot of talk, literally just days before when they're talking about slapping another $276 billion, and now they're reaching out to play nice. Now let's go and move into the sterling. Sterling for the second biggest weekly rise in 2018. Sterling rose on Friday and set for its second biggest weekly rise in 2018 as an imminent concerns over the outlook of emerging markets faded after Turkey's sharp rate hike. One of the things we talked about was the close, a daily close above 30.56, and certainly we got it. There's that pivot that we've repeatedly talked about here. We went into details yesterday regarding that 30.56, and so overall I'm looking for a move up here to 133. 33.17 is at 38%. We're looking for a pause at 31.70, but certainly it looks like it's going to be up and away as it continues to respond positively, even when we get negative headlines. Yeah, it takes a dip, but it turns around and pops right back up. You've been seeing that here, 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 here. Every time it gets knocked back, it just comes right back up and pops back up. It's been a good week for high beta currencies, including the pound, thanks to Turkey and growth upgrades by the Bank of England, but it's still too soon to flip to net long, said Kenneth Brew, currency strategist at Societe Generale in London. Mentions the fortunes were mixed against the euro as the lower than forecasted U.S. inflation data pushed the single currency higher. Weaker U.S. inflation data continued to hurt the dollar. The U.S. Consumer Price Index, the government's broadest inflation gauge, rose 0.2 in August and less than 0.3% projected by analysts in Reuters. Euro hits a 2-week high as hopes rise for U.S.-China trade talks. The euro rose about 1.17 to a 2-week high on Friday after weaker than expected U.S. inflation data. We already mentioned about the Turkish central bank, and a new round of talks to reduce tensions between the United States and China buoyed broader market sentiment further on Friday. As I said, the administration is now denying that they reached out to China. Look, the market knows what's up, and that's what I'm saying. He's saying right here, you can deny all you want, but a new round of talks is starting, okay? That's why the dollar's lower. The bigger move is in the U.S. dollar and its continuation of yesterday after weaker U.S. inflation data, said Esther Reichelt of Commerzbank. The European Central Bank kept policy unchanged and is expected on Thursday, staying on track to end its bond purchases this year and raise interest rates in the next autumn. And we already mentioned about the emerging currencies like the South African rand and Mexican peso held on to the gains after a big rise after investors welcomed Turkey's central bank move to hike policy rate to 24% to restore confidence in the lira. And mentions also about the Aussie dollar. So let's go on and move on here, and we're just moving quickly. Eurozone bond yields creep up and bund yields hover near 6-week highs. Boy, you can see here this bund has really moved back to the low end. Obviously, right here, lower prices, higher translates to higher yields. Borrowing costs for the euro area crawled higher on Friday, with German bond yields hovering near 6-week highs after the ECB confirmed its monthly asset purchase will be halved come October. Demand for safe haven bonds, says Germany, was also dented by hopes for a new round of trade talks between the U.S. and China. The ECB lowered its growth projections by 0.1% for the next 2 years. The ECB staff forecast showed only trimming of growth expectations. Our interpretation of the forecast is that they will tell a story of the euro economy, which is still growing comfortably, and where headline inflation is likely to remain close enough to target for the central bank to keep hiking rates into September 2019, or to be hiking rates then. Okay, and also indicates with Italian yields, we've lended to move in the opposite direction to those of the higher rated bond markets, especially in recent weeks where worries about the government spending plans have weighed on the Italian bond market. Risk factors that have been worrying us have become less worrying in the last 24 hours. And lastly, let's take a look here with the gold market. That was a bit of a surprise when we got this move higher, but then we quickly gave up those gains, and I think it really left bulls disappointed. Gold rose on Friday as the dollar faltered after the softer than expected U.S. inflation data. With the data falling short of expectations, investors are thinking that the Fed may not go for a rate hike in December, even though the hike in September is definite, said Xi Ming. The dollar index fell against the basket of major currencies and was a shade lower at 94.42 or 94.44. Trade negotiations is a favor to the gold market, with the dollar a little bit soft and some shorts being covered. There's also some physical buying in Shanghai. Gold prices have declined about 12% from a peak in April amid intensifying global trade tensions and under pressure from rising U.S. rates. Holders of Spider Gold, the largest ETF, were down 0.4 on Thursday and 4.1 million ounces from an April peak. Yeah, I mean, the Spider Gold, I mean, it still continues to be going lower and lower. You have to wonder, I mean, even on the way down, it was still going lower. on the rallies back, it still goes lower. We're still pushing lower. Interesting, very interesting, actually. If prices stay around $1,200 levels, it means the markets are still positive. People who shorted below could come and cover, driving prices to 1250, said Hidetake Namiki, chief executive at Singapore-based asset firm Bullionist. So let's go on and move this out of the way. And let's get going with the euro. So we had 1698. This is right where they ran out of gas, or they went into resistance. I think they got right to 1700. Then they dropped down to, I think, really not a whole lot. I think they dropped down about 20 pips and stood there, and we finally came back. Well, maybe they dropped a little bit further. They actually did. They dropped, so I guess they dropped about, almost 30 pips from that area. There's our resistance, 1698. So they just barely poked their head above it. And we came back and stayed there, and we started working higher. This high here, 17 looks like 22, coincided with the cash dollar index support. There was our bias chart resistance or bias chart support for yesterday for the cash dollar index over the next 24 hours was 94.36, although I thought we would get to 94.36 in the US session yesterday. You can see here we got exactly to 94.36 right there. It looks like it's 94.35 and a half, so off by half a tick. So let's go and look at where we are for the euro. Certainly we have gone and moved higher. And if the dollar, we're looking for a move eventually up here to this 38%. If we start to, we're going into, well, I mean, we're already in Friday, but I'm saying is we could see further selling of the cash dollar. When I say further selling, I mean as far as bulls who turn around and say, you know what, okay, I'm getting out. So we could still see a further uptick here in the euro. My concern is as we go into the end of the week, if the dollar starts to roll, it'll keep on rolling, and we'd obviously see this euro move higher. Some good resistance here, and we didn't even make it up to there. So well, I'll tell you what, we'll put it right here, 1743. But this is actually the target up here. So that'll be our resistance for today, 1743. It's still going to stay in a range. Yeah, we've had a breakout. We're looking for a breakout, but when you put it in the bigger scheme of things, folks, that's still a range. And what we look at the 3 to 5 days, but I mean, as far as our bias, as far as the same with the bias, whether it's bullish or bearish. But look, we're just in the upper portion of this range. So nothing's changed, so it's still a range. It's gone, it's been reacting bullishly, and it's broken out of this little pattern, but it's still in a range overall. Let's not get overexcited. I think we're still going higher, but the bias is still in range. Now let's take a look as far as support. Here's the breakout area. Oh no, it says 68. We're going, it should be 58. Yeah, we'll go with that. 1658, the top of this zone here we have. That's why I like to color in these zones, because you can see where the breakout area is, or where the fall. You can see how they rotate back and forth, and where you look for them. You see how they came back for support into this zone, and once they got below it, we just start heading lower. And where do we rally back? Right to the top of the zone. This makes it easier, visually speaking, for you to see where things are at. I mean, at least for me, why I like to color in these zones. If I can find a zone where I think that the market is respecting, yeah, I would look for this for support. If we were to start to slide back, 1658 is support. Let's go and move into cable. So we did get that daily closing cable above 3056. We've talked about the importance of this pivot. That's why we have that marked off in crimson. And we're looking for a move up to 133. Actually, we can make it up here to this little zone here. You can see that 3347. That's going to coincide or confluence with 3317, which is the 38% of this entire move. And I'll show you, for those that are not, don't use Fibonacci very often. You see right there. There you go. There's 38% of this entire move. And this upside, hold on. Might be a little bit higher or lower. Might have hit the mark. Come out. Oh, I moved it and kind of threw it off. So you can see that coming in right there. So it's going to be 3317 here on the 38%. Retracement back. Well, it's a natural area for the market to rotate to. And certainly now that we've got that daily close above 3056, the market's going to have that momentum. Anybody short is going to be looking to buy back on any kind of dips. And the same thing, anybody who wants to get long, once again, is going to try and buy back on any pullbacks. So resistance today, well, this was our, remember we talked, there's that 3168, and when I did on the analysis, we said, hey, we're looking for this market to move higher, especially if it gets a daily close above 3056, and with an initial pause at 3170. So that's exactly what we're looking for. So that's going to be our resistance, 3170 for today. And now we got that daily close, we will change this to bullish. Support now on the cable for the pullbacks. Let's take a look. Obviously 3056 is huge. We're going to go right there. You see that? 3036. 3036. Actually, we move this right. You see right there? Coming across all that good support, we're going to call it 3030. 3030. So if we get some kind of crazy headline come out, it'd be 3030 for support. It's still a ways that really you'd be looking at the 3056 is huge. And so if we go and shoot past that a little bit, I think any moves down here at that 3030 is where you'd want to go and step in and start to go in, or where I would think that the market would step in and want to support that gladly, as things are starting to turn the way of the cable. Now let's move into the Aussie. Certainly this has come up, and that's our resistance from yesterday, because we said, hey, you know what, and always look at these resistance areas here, this, and look, hey, look, this market is so oversold, it's so beat up that you can get a swath of short covering that'll really push this market back up. So that's why we went just with the straight up technicals, and we're going to stay with that. 72.55 for the resistance. Support, market up holding up rather well. Support's going to be right there. Right there, you see that? That's going to be 71.66. Maybe we could push a little bit lower. That's not much. We'll go with 71.65. 71.65. Just move that up just a bit. Oh, Rio says hi. He also says take a look at the, oh, he says the US 30-year cash. Okay, Rio. I actually look at the 30-year futures, and he says, what do you think about the longer term for the New Zealand dollar and Swiss franc? That would be one question for Stelios and Steve, who look at those cross rates. Me, as you can see, I only focus on the majors and also gold, bonds, and bunds. I do have the DAX here, but I don't really trade the indexes very much anymore. I just, like I said, this keeps my, I think if you want to trade the indexes, at least for me, I think I just have to almost exclusively focus on the indexes. And unless I'm holding for much longer periods of time, and that's not my style. So, because you have to be looking at also the cash market and a lot of things put to, just a lot of stuff. And so for the most part, I just focus just on the majors, bunds, and gold. Let's go, but like I said, that would be a question you can give to Stelios and Steve. Let's go on in, take a look now with the, but thank you very much for the comments and the question. Let's go on and take a look now with the Kiwi. Well, finally we're starting to move a little bit higher. Remember, yesterday was like, it wasn't even much of a move compared to what the Aussie had done. But you can see they came right into our resistance here. They're just a little bit lower than our resistance. Our resistance on the Kiwi was, well, actually 66.07. So here's our resistance. Right there. So we did move it up here. So it hasn't quite hit the resistance here. We're going to go and keep that. We're going to stay with that. 66.07, which is right there. We're going to go and keep that there. Support. You can see here 66. We had 65.25. We may have to go in and move that up now. Here's where we had 66.25. We're going to move it right here. You see here, that plays in really well. You see market finds resistance, and now that support, that's going to be 65.42-ish. Yeah, 65.43. That'll be our support, 65.43 on the Kiwi. Still, once again, I don't really see anything other than it's just oversold. Let's move into the dollar CAD. We have really worked lower in this thing. A couple of days ago, going very late into U.S. trading, boy, did this thing come apart. And remember, we got a little bit of a bounce, and we just turned around and rotated. I thought we probably, I was telling y'all the story. I was talking to the one guy in the chat room. This is in the Asian session, and he was up 30 pips. And, he was wondering, hey, if he should go and hang on. I was telling him, well, after a fall like that, it's going to be under pressure for the next few days. But honestly, I didn't see this move. I thought, let's take a look. After this big move, I thought we'd probably go to here. Then we'd probably move here. Then here. And then maybe we can go up to here, and then you get an opportunity to sell it. I didn't think I mean, I thought we'd be under pressure, meaning we'll test this area. Maybe we could even push a little bit below 30.40. I didn't think we're going to just drop another leg here. So let's go and move this. So I still like this area of support. This 29.73. Let's see if we had actually moved it down to 29.51 in case we got a little bit of an overshoot. That's right. And boy, that is a bit of an overshoot at this point. But once again, I tell you what, we're going to keep the 29.51, and I'll tell you why. Is because my concern is if we see further liquidation of the cash dollar index. Anybody that's long now, let's say they're long from here and here and here, has to be saying, wow, this doesn't look good. You know what, why don't I just go on and get out of my longs and I'll start over next week. So we could see continued pressure. That's why now, instead of maybe saying, okay, right here, to be on the safe side, I think it is, we're going to keep that support at 29.51. Resistance? Right there, 30.45. You can see this coming right across. You see this little level coming right across? 30.45 is resistance, which would be just about tagging that trend line. So it's going to be 30.45. Anybody who's long on any rallies back, they're trying to get the heck out of this thing. In the bigger scope of things, yeah, that market's still bullish. In the bigger scope. Let's take a look at this. Yeah, right there. Maybe that's what's holding it. But like I said, try and look for any type of confluence we can get, but it's certainly weaker. And if the dollar does, we see further liquidation, we can really come back in quite a bit. I'm not worried about any fib right now here because I think, you can find 61, maybe 78. Look, if we start to see this dollar liquidation, the pressure is just going to remain. And this dollar cat just can't seem to get any kind of lift here. I mean, they've got the bulls on the defensive. There's no reason to let them out of jail. So pressure will remain there. I think Joe might still be, may still be short. She's been trading this thing like nobody's business. But anyway, let's go on and move in now to the dollar Swissy. This is a good indicator at this point. I've noticed here, and we talked about this yesterday, the dollar Swiss, we saw that yesterday weaker, and we talked about how it got below the 97.09, and this looked like it's still moved lower. Well, I'm probably not saying a whole lot because we were thinking the dollar was going to move lower anyway, but it remains very weak, which may foretell, further liquidation here on the dollar. Certainly, look, let's put it this way. Certainly, we're not seeing any type of divergence. Now, the support we're seeing here looks like 96.23. Let's see if we can see something a little bit definitive here. Right there. 96.16. That's a heck of a way lower, but that's where it's looking at. 96.16. We'll also see if we can see anything as far as a fib here. Hmm. 96.26 is a 50%. So that makes sense. And I do like the 96.16. So we got 96.26 as a 50%. So let's go with 96.16 for a little bit of an overshoot. We seem to have a little bit of touches right there in that area too. There's our 96.23. There's our 96.16. You see right there? So a little bit of support. You see right there, this close right here, and also the low on this little doji here. That 96.16 looks like a good area. It's actually 96.17, 96.16, where they could, 96.26 is a 50%. You got a level there at 96.23 and a little bit of an overshoot to 96.16. So that's a good downside target. And certainly the pressure is there. That's on the daily. Let's go now to the, back to the 2 hour. We can find some upside resistance. That's what it would be. Wow, this thing is really taking a tumble. 96.78 would be upside resistance. Certainly bearish, there's no doubt about that. Let's go and take a look here with the dollar yen. Well, we just about made it here to that 12.11. I think I was telling Amir yesterday 12.16, but it's 12.11, 12.16. I said, okay, well, 12.11. Look, we got past this bias pivot. But we were talking in the chat room, and he was saying, what do you see? I said 12.16. Well, I printed up the chart, and there it is, 12.11. We made it. I thought we'd even make it a little bit higher. We did make it up here to 12.08. I think Amir was looking for 12.20. That's the resistance there, 12.11. Let's take a look here. I don't want to say bullish. I don't want to switch this back to bullish until we get 2 consecutive days above 1166. 2 consecutive days above that key pivot. And it is a very key pivot. Let's go on and, well, actually, let's go to the daily. That should tell us enough there. See how big 1166 is? If that isn't a pivot, I don't know what is. Yeah, I want to see 2 consecutive days, 2 consecutive daily closes above 1166 before I want to flip this and say, okay, now it's bullish. You can see the 12.11 coming across here, and they stopped at 12.08. Other than technicals, I don't know what, well, I was going to say other than technicals. Well, obviously there's a good reason why it's up here, because U.S. rates continue to be moving higher. Look at that. And generally, although the relationship had broken off for a while, let's take a look at this. The dollar yen generally trades inversely to the 30-year bond or 10-year note, whichever one you want to look at. But so if rates are if bond futures are going lower, meaning rates are going higher, so bond futures prices going lower, then generally that means here we're going higher. Although when you look at where bond futures have been, look at this, falling into the basement. You certainly would have expected the dollar yen to be much higher, especially how strong the dollar's been overall. That's why it makes me question this whole move up in here. But technically speaking, it is where it is. I mean, it's above that bias pivot, but that's going to be a resistance. Support, well, obviously a move back to the bias pivot and maybe a little bit of an overshoot. So support would be right there, 1158. That's your first area of support, 1158. It's going to be interesting to see how the dollar yen can hold up here if the dollar starts to lose its steam, and we see further dollar liquidation. Speaking of the aforementioned dollar, let's go and move into there. So we were looking for a breakdown here in the dollar, and really just I want to say a mix. I mean, we're looking at the technicals, good reason, but also we've been saying, and I thought we, once again, I'll say this, earlier in the week, I thought we were just one headline away from blowing some stops here, you know, and then the market could start to ease back again. But as I mentioned, the news with the dollar took a dip a couple of days ago, a couple of mornings ago, not yesterday, but the day before, on the news that the administration was reaching out to China to restart talks. Now, they denied that, but now the market doesn't believe that. And once again, not speaking politically, I'm just saying is that's a perceived sign of weakness, because all this has been, most of this has been a result of all this tough talk about all these tariffs and business. So with the administration reaching out, it looked like, oh, okay, well, there goes the bid for the dollar, which was really having a tough time trying to move to new highs when you think of where the economy is, the Fed raising rates, and then all this tariff talk. You thought, as I said, I would have thought the dollar index would have been much higher. So it's been struggling, and it's been using these headlines as oxygen just to go and keep up here, like basically treading water. And then all of a sudden that headline comes out, Steve Mnuchin reaching out to China to restart talks, and shit, it just pulled the person under the water. And that's where we are now. So as we go into a Friday, you know, last Friday we got this up pop here. That was the headline where the administration of Trump says, I'll slap another $276 billion on China. So that was where the dollar index was, even after the non-farm payroll report had a bit of a bid, but we weren't doing anything yet. We were right in here. And then all of a sudden that news, and we finished the day strong on that news, and we just slid right back. So now essentially you can think of the news as being refuted, not only refuted, but going in the other direction. And we've seen this. And so now when you think of where the dollar index is now, you're probably thinking, well, we could easily see further liquidation of longs. Hence, I'm thinking we're going to drop back. Well, but based on this move, all I was thinking is that overall, unless we get a 2-hour close above 95.32, potentially we're looking for a move down, or at least I am, down to 92.80 with a pause at 93.72. But like I said, we're in the infancy of this move, if it's going to go on and play out. So we could easily see further liquidation going into the close. But yeah, selling up against the break of this. So where's support now? We had support at 94.36 from yesterday going into today. We did get to 36, but I thought we were going to get to 36 in the U.S. session. I did hold the 36 from this morning's European session. Where's support now? Well, my concern is if we start to rotate lower, we'll break this, and there's no reason for anyone to step in the way of this on a Friday. So we're actually going to move the support down here. Just a little. We're actually going to just move it right on down to 94.09 in case things really start to slide out. So I'm actually going to go on and stretch this. This is actually going to last all the way into Monday, because in case we do see some dollar liquidation, I definitely wouldn't get in the way of that. And resistance, that's that same area we talked about yesterday, which is going to be, well, where we were seeing an optimal area for you to initiate, or for not you, but for the market. Technically speaking, because I'm not offering any buys or sells, technically speaking, I said this was a more optimal area to go and sell any moves to 95.07/08 with a stop at 95.32 on a 2-hour close. Well, there's our 2-hour close, but we've moved lower, so it's going to be 95.07. But I think it's baked in the cake, at least technically speaking, what this market wants to do. At this point, if you lowered it here, it really be moves just to any moves to 95, 95.02. Actually, we're going to go with that, 95.02. Still looking for an overall bigger move lower. Just on a correction, that's all. And I kept this as a range because the reason is we've just been going up and down, up and down, up and down, up. We get a breakup now. Right, here we are back up and down, up, and now we're starting to move towards this lower end. So there's that 94.09. You can see that here. We're looking at it on the 2-hour chart. I like the 2-hour chart. The reason I like the 2-hour chart is because instead of, if you're looking at a 4-hour chart, nothing wrong with that. Most people do. You get 6 bars throughout the day's session. Well, if you're looking at a 2-hour chart, you get 12 bars. So you can see things start to possibly, the market's tipping its hand. At least that's the way that I would look at it. That being said, let's go on and move in now. So we've got the dollar index out of the way. Let's take a look at here on a daily too. Okay, so the key level on the day is going to be this 93.89. Certainly some people are going to look at this as the potentially as a head and shoulders. And then your neckline would be basically 94. Now, some people might stretch it there, but the neckline 94, 93. So that would pretend to move if they would break that really down to 91, if that's what it would you'd be looking at. But what I'm looking for is a move to 92.80 with a pause at 93.73. We'll see what happens. Now let's go and move into the gold market. Now we're looking overall, we're looking for a move eventually up here at 1245. But this had to be disappointing yesterday. Now we did close above this key area, and we talked about this. This was the day before. Remember, that was our bias chart resistance on our daily close. Look at that. 1207. 1207. That was a resistance on a daily close. We mentioned that was a key number, and we closed above it the day before. So the market was open to move higher, and higher it did move, okay? And we actually ran out of gas. If you look here, here's our resistance from yesterday, 1219. And where I got that 1219 from for, and those who've been following the analysis with me for a while, you know that 2 weeks ago we were talking about this 1219 being huge because we looked at the market profile. And at the time, we kept kind of bumping up there. We were coming a little bit short. So I remember for 2 days, might have been 3, but I think for sure it was 2 days, we had the resistance at 12.19. And on this day, they poked their heads up in the European section, I think it was. They got up as high as 12.20 and change. And I was looking for a rotation down to 12.08, and I thought that would take place over the next 48 hours, maybe a little bit beyond that. I'll be doggone if it didn't get down to 12.08 within the same session. So that's why I had that 12.19. That's also obviously, and I was looking right here at the point of control. That's also the volume point of control. There was just a lot of good stuff right in that area here. And just a moment. And there was some decent volume in here too. So what do we do now? And this is volume on a weekly level. So you can see a ton of trading going on at 12.12, and obviously down here we're kind of stuck a little bit in no man's land. One of the things that we did yesterday, I was in the chat room. We talked about, or I mentioned, well, you know, obviously the breakout from the daily level, which is 12.07, was going to be support, and I had a bid just below that, and I got filled. It rallied up. Actually, probably spun out of that a little bit too quickly, but it popped up for a quick couple of dollars, and then actually moved up another $1.50 or something like that. But anyway, the key is that this resistance before then became support. Now they did eventually move a little bit lower, but I'm saying that was after the move. I think it made it up to like 12.10 from after it dipped down to 12.06 and change, and then eventually it rotated lower. That being said, that was going to be the support. So where do we stand now? To me, I think bulls have to be disappointed. I mean, it had an opportunity to really break higher. And gold, we talked about gold's kind of been not leading, but it's been mildly diverging positively from the dollar. When the dollar would fall, gold would pull back, but it was restrained moves on the way back. So you thought, okay, well, gold's ready to launch. And it started taking off. It wasn't playing around. And then for whatever reason, we really lost the bid. And so this has got to be disappointing here. But it's important that they hold in this area above 12.07 for right now. So we'll see what happens. So let's take a look at it on a closer basis. So here's what I like. It's still going to stay the same. Support's going to be 12.04. Any moves to 12.04, I like the move if we can get a move down here. This 12.04. You see here? And but I tell you what, bulls have got to be very, very disappointed with how this played out. I still think I like moves down to 12.04, and it's important that they hold 12.07 on the daily close. So if we dip down to 12.04, but we end up closing at 12.05 or 12.06, that's not good because, as I pointed out to you, this is where the market was able to finally break out. Right there, 12.07 on the daily close. So if we get a daily close below 12.07, that means they have to go further down here to do some repair work and get some more buying. That would be it from a percentage standpoint. So let's see what happens. I still like buying it then at 12.04. And overall, only a 2-hour close below 11.97. Now that being said, we've already spun higher. From a longer term basis, yes, 12.04, 2-hour close below 11.97 for me is a stop. But it's going to be key if we get that daily close below 12.07. That means we have to do further repair work down here, and we'll have to get some more new buy-in here. So watch that daily close at 12.07. So here's what I'm going to put here. Also, let's take a look on the profile. Yeah, really, there's a lot of volume. Look at all this right here, here to here. So this is where they're going to go to. If we have to end up going closing below 1207, they're going to 1201. This is where the volume is. You see a lot here. Well, a lot where the market spent a lot of time trading. The volume comes in right there, just below 1201. We'll see, but I don't see how it makes it down there if the dollar's going to stay weaker. I still like right here. You see here, the volume here and the point of control right there, 1206. That's what I'm thinking. If you get any dips down to 1204, I think that's a very good opportunity for a low overall longer term basis. So I like the 1204, but here's what we're going to mark on here. Important that they hold daily close at 1207. That's important. Or you got further work on the downside. I don't think it's going to be a whole lot of work, but they're going to have to come back and do some repair. On the upside, I think we're almost out of time. Yeah, we got a little bit of time. On the upside, you can see it right there. See this close right there? So it's going to be 1213. 1213 on the upside. That's where the market will probably try and go back to again if we can get this dollar, in which the dollar is not. The dollar's finding some support here. You see that? But I like selling the dollar and he rallies back towards this area here. We already mentioned 95.02. I guess, you know, with the dollar, you haven't gone wrong buying it on a Friday because what's traders go by patterns. So, you know, as I said, I thought we were from here. We were one headline or really a tweet away from a new high. Well, what happens in the morning? We know we get some tweets. So yeah, we'll probably maybe a couple more acrimonious tweets, which might provide an underlying undertone bid for the market. Certainly we saw that Friday. Look at that, you know. And so traders are probably playing the percentages thinking we may get just that. If we don't get that, then my guess is we'll probably start to rotate even lower. So maybe about mid US session, if we haven't received any tweets to push this market higher, and I'm not saying that facetiously, I'm being serious, then you'll probably start to see the market weaken back. So 1213 would be an interesting area here. But I still think this market has a nice bullish setup on the gold. So let's go move into the bonds. Holy smokes, this thing just remains weak. We had 41.27 on our support. You see here, it's still the same. They're probably going to try and test this, which really, look, there's support right here, which is 41.20, and to here. 41.18. I'm going to go with 41.18. Here's the reason why. It's a Friday. The trend still remains down. They're going to try and push the stops. How much of a follow through below here, I really don't know, but I'll go 41.18 for support because it's a Friday and they're going to try and push it for what it's worth. Makes sense. Resistance is going to be right there. 42.26. And I'm trying to scoot because we were right out of time. Well, same resistance, 42.26. Buns, well, these things have just been weak as all get out. Resistance now. This is really an important area here. This 59.20-ish area here. Let's get rid of this. You see right there, that 59.20? There's some good support there. Could we push a little bit lower? Right, okay, look, you see this? All those touches come across. That's 59.14. Actually, it looks like we've almost made it to 59.14. I think from a long-term area, that's a very good area here. Pretty well beat up in the market. So we're gonna go 59.14. right there. There's your resistance. See right here? It's 59.29. Can we see the market come back? Yeah, maybe. This is bigger resistance, but I don't want to give that much room, which would be 59.38. That was actually a good reactionary point the other day. I picked them up at, we had support at 59, I think it's 28, and then they went to as low as 59.25, and then I picked them up, but I jumped out after like 5 ticks, and they jumped up to 38, rotated low, and then went higher. So we'll go with 59.38, but on a very short-term scalp basis, it's going to be 29. So if we can see a recovery at the end of the day, look for 59.38. And lastly, with the DAX, here's that key area, and I think we kept that, which is 12.105, and we're going to stay with that 12.105. That's where they're very key technical level here. We can pull this back. You can see that support right there, 12,037. Now we actually had 12,030, so just move that up 7 ticks.
How you doing, Paul Franco?
Hey, Blake, how you doing?
Good. Just trying to enjoy my Friday.